Demand is down, supply is staying level, and lenders are tightening their requirements. This week on Market Watch. What's up, everybody? Welcome to this episode of Market Watch for the week of April 11th through the 17th. I'm your host, Jason Zwolak of the Zwolak Group with First Team and Christie's International Real Estate, coming to you from sunny Irvine, California. I hope you're all having a fantastic week. For those of you tuning in for the first time, each week I take a look at the Irvine and Orange County market as a whole, and then I break the Irvine housing market down into 3 separate sections. If you do like this video, make sure you hit that subscribe button, hit the little bell so you're notified every time a new video is posted. I do upload new videos every single week. Another week is come and gone, and another week of changes has taken place. We did see our supply or our inventory go up slightly. However, demand took a steep drop, and lenders are really tightening up their qualifications. Last week, we saw Chase, the biggest lender in the country, release a statement letting people know that they are no longer issuing loans without 20% down payment and a minimum 700 FICO score. So we're really seeing that buyer pool shrink. And as that buyer pool gets smaller, there's just less buyers out there on the market. The inventory, however, isn't going up as fast as it has in years past, understandably so. People are holding off putting their houses on the market because of COVID-19. So we're getting asked the same question weekly, daily, by buyers, by sellers, by friends and family, is the housing market crashing? Is it going to crash? Are prices going to drop? Well, all the indications that we have right now and all the data that we have that supports us is saying no, not right now, not yet anyway. And I really want to start today's episode out showing you some of this data to really let you understand what we're looking at and some of the historical data from 2008 because of the Great Recession, because a lot of people are comparing that right now. And a lot of buyers are out there thinking that they have all the control and they're coming in like 5, 10, 20% under list price when there's really not any data to support that. So that's what we're going to do to start this show. It's going to be a little bit different than our weeks past. But so first off, I want to look at the active inventory numbers in Southern California and Orange County. So let's check those out. So right now in Southern California, we have just over 30,000 homes that are currently on the market. When we compare that to last year, we had just over 41,000 homes. So that is a 38% drop in the inventory when we compare this year compared to last year. Now when we look at Orange County has almost 2,600 homes less on the market. Last year at this time we had almost 7,000 homes on the market. This year we're just over 4,300. So we're seeing a massive drop in the number of homes on the market. And what that does is that really affects the pricing. So that's why we're not seeing a ton of movement on those prices yet. Even though we're down 60% inventory and demand is down, there's not enough supply right now to really justify a massive drop in pricing. Okay, so now when we move from this and we look at historical data, so let's look at what happened in 2006, 2007, 2008. So from this graph, we look at 2006. 2006, we had 16,000 homes on the market. 16,000. In 2007, that jumped to 18,000. And in 2008, we dropped back down to just under 16,000 homes. So in the peak in 2007, we had 18,000 homes on the market. That is almost 12,000 more homes on the market than we currently have right now. That is a massive amount. Typically, we see that peak around 8,000 homes every year. Other than during the Great Recession, and that's when we saw those really spike. And in 2012, we saw some dips as the inventory just wasn't there as well. But right now, we really are nowhere near the numbers in supply that we had in 2006, 2007, 2008. So now, moving from there, we want to look at the supply versus the demand. So the Orange County listings, the inventory, versus how much the demand are. So when you look at this graph, you look at the black line is like where the bottom was in 2008, and that's really similar to where we are now. So we're seeing our demand is about as low as it was in 2007. But again, the inventory, the supply is huge. In 2007, 18,000 homes, now just over 4,300 homes. So you can see that difference when you look at the current numbers versus the inventory from 2007. And really what this does is when we had that big supply and we had that low amount of demand that we were having during the Great Recession, that's what drives prices down, because these buyers, you only have like 1,600 buyers every month that are actually buying houses, and you've got 18,000 homes to choose from. So they have a ton of choice or options, and because of that, prices will start to drop. Also, during this time is when we saw a lot of people end up with negative equity on their home, because as these prices dropped, they owed more money because they were pulling money out in the second mortgages. They're pulling that money out. And so as these houses dropped, they owed more money on their house than their house was actually worth. So what did they do? They walked away. Houses were foreclosed on. I'm sure many of you that are watching this right now knew of people or personally, or you know somebody that probably lost their house during this. Or maybe a neighbor or someone in your neighborhood lost their houses. There were neighborhoods that had multiple foreclosures. So now there's the issue of these homes being foreclosed on. What happens in a foreclosure? The house sells for even less than what the market value is. So now you have 7 houses in your neighborhood, say, that have all closed for less than market value. That drops the price down even further. And that's what causes the housing market to drop. I want to thank Stephen Thomas for this information. He does a great report every week, and I love reading it, and it really helps me stay up to date so I can get this information over to you guys. So really, that's what's happening in the market as a whole in inventory and supply, and really what's happened in the history. So now we want to take a look and see what's happened in Orange County and Irvine like we do every week, and see if there's any similarities and differences. So first, we're going to check out Orange County. So in Orange County last week, we had 350 homes sell. That was down 19% from 430 the week before. The average days on market for those homes selling was 27. The number of homes that are currently on the market is just over 4,400, where we were just under 4,300 last week. The average list price this week was $884,764, with an average sold price of $874,763, which is a 98.9% list to sold average. The new number that I started doing the last couple weeks is number of homes in escrow. The number of homes in escrow right now is down 7.6% compared to last week. We're at 1,865 homes currently in escrow. So we did see what we talked about earlier. Right at the beginning of this video, I talked about we saw demand drop, that's number of homes sold, inventory or supply go up, active homes, and then I also talked about the lending as well. So we did see that happen here. Now, surprisingly, again, we talked about pricing. Our price is coming down. List to sold average, 98.9%. So 1.1% off of list price on average last week. And this week was kind of the important week. I was really excited about doing these numbers because this is the first week really where some of these homes, most of these homes, sold or went into escrow during our stay in place. These all went into escrow in mid to late March, right? So that's where we are now. We were in that stay in place order, and at that point, essential real estate wasn't even deemed essential yet. So really excited to see that these numbers are still holding, and they're still staying strong. So now that we've taken a look at Orange County, let's jump in and take a look at Irvine and see what similarities and differences we have. So in Irvine last week, we had 25 homes sell, down 22% from 32 the week before, so very similar to Orange County. The average days on market for those homes, 17, so they were in escrow quite quickly. The number of homes that are currently on the market were up 10 from last week. We had 527 on the market this week, 517 last week. And the average days on market for those homes is 68, which is the same as the week before. That's for the active inventory. Now when we looked at the list to sold average, the average list price was just under $1,031,000. The average sold price just over $1,008,000 for a 97.8% list to sold average. Again, only down 2.2% on average off of the list price. The number of homes that are currently in escrow, 146, down 8.2% from 159 last week. So very similar to Orange County. Number of homes in escrow dropped. Number of homes sold dropped. Inventory, supply, up slightly. Days on market stayed relatively the same. And our list of sold average, good, at just under 98%. So we're seeing a lot of these similarities in the Irvine and Orange County market, and a lot of this is expected because of the COVID-19. We expect to see a drop in demand compared to this time last year. We expect to see less inventory. People just aren't coming on the market right now. They don't want to take the risk. They don't want to wait until they feel that there's more buyers out there so they can get more money for their house. Completely all understandable. Buyers don't want to get out because they want to wait until prices come down. Potentially a good idea. They also may not be able to qualify for a loan now because of the restrictions that are put on. So all of these moving parts are what are causing this demand to drop and the inventory to kind of stay at that level pace. Okay? So now that we've taken a look at Orange County and Irvine as a whole, you know the drill. I break down Irvine into 3 separate subcategories. The first of that being the first-time home buyer market. And this one is any homes listed under $750,000. So let's check them out. So under $750,000, this week we saw 9 homes sell compared to 12 last week. So we saw about a 25% drop in number of homes sold. The average days on market for the homes selling this week was 7, so they sold very quickly. The number of homes on the market, 130 versus 125 last week. And the number of days on market for those homes were the same at 52. So again, not trying to repeat myself, but very similar to what we saw in the Irvine numbers. We're seeing that similarities move across the board. So now let's take a look at the step up and see if they're staying the same. I expect they will. So in the step up category, we saw 10 homes sell this week versus 13 last week. So we did see another roughly 25% drop in number of homes sold. The average days on market for those homes, 24. So moving very quickly. The average days on market for the homes that are currently on the market is 56. The number of homes that are currently on the market, 217, only up 2 from last week at 215. So again, this category, that $750,000 to $1.25 million range, we didn't see much inventory added, only 2 homes. So it's a very low percentage, less than 1% of the houses that of the inventory came on the market. So very low amount. We did see a drop in the number of homes sold. Again, we're expecting this, but it's really going to see how long it takes until people are either forced to sell, and if that ever comes. If we do turn the corner on this and we are able to kind of get back to a somewhat normal existence and lenders are able to go back to and release some of the qualifications and lower some of those qualifications to increase that buyer pool because the job security has increased, then we may see these prices actually start to go up, right? As more buyers come on, you may have people that don't, the demand may increase faster than the supply can. Or it could be vice versa. You could have more people come on and demand stay the same. There's so many different things that can happen. We're trying to keep our finger on the pulse of this market so we can get this information to you guys so you know what's happening. So now we've taken a look at first-time home buyers. We've taken a look at step-up. Let's take a look at the luxury. That's anything over $1.25 million. Let's check it out. So last week, we saw 6 homes sell versus 7 the week before. So not much of a difference there. The average days on market for the homes that sold was 21 versus 31 last week. The average days on market for the homes that are currently on the market is 94, same as last week. And the number of homes that are currently on the market right now is 180, only up 3 from 177 last week. So again, same numbers. Inventory up very slightly. Demand down slightly in this category. And the days on market are pretty much staying solid. So we're really, again, we're looking at these numbers. We're trying to figure everything out. And we're trying to see where this market's going to take us. Not a lot is pointing to a huge crash. But again, time will tell. This market is changing. It's changing every week. So we are trying to keep our finger on the pulse for you guys. And we will get this information out to you as we get it. So now that we've taken a look at all of the happenings in and around the housing market, I always take a minute and take a look at the interest rates. Interest rates are low. For those of you that are looking at getting a mortgage, the interest rates are historically low. So let's check those out so you can see what's happening in the mortgage world. So our conforming 15-year fixed is 3.14% with a 3.35% APR. Conforming 30-year fixed is 3.57% with a 3.77% APR. Conforming 7/1 ARM, 3.39% with a 3.8% APR. Now the jumbo, anything over that 756,000 mark, is 3.32% and a 3.35% APR for 15 years. Jumbo 30-year fixed, 3.7% with a 3.76% APR. A jumbo 7/1 ARM, so the variable rate, 3.22% with a 3.67% APR. The FHA 30-year fixed, a 3.44% with a 3.88% APR. Great rates, and there are some programs right now where you could get some closing costs and some down payment assistance on that as well. So definitely want to look into that. And for our vets out there, 30-year fixed, 3.49% APR, 3.49% and a 3.54% APR. So that is a great rate for our vets and our current active military. If you are thinking of selling or buying, you may want to move that up. And if you feel like you are in the position to do so, with these rates, it is a great time. So that's what's happening in and around our housing world here in Orange County and Irvine. Again, I want to thank Stephen Thomas for access to the information on the inventory and supply and demand graphs that I used in this episode. If you do have any questions, please let us know. Whether you're thinking of selling or you're thinking of buying or you just have a question about what's happening in the market, we're here to help. Shoot us a comment. Shoot me an email. Shoot me a phone number or give me a call. Shoot me a text. We're here to help you in any way that we possibly can. If you did like this video and you think it was helpful, hit that subscribe button, hit the little bell, get notified every time I post. You'll get a new video every week. I hope you guys all stay safe out there. Remember, we're in this together. We're going to get through this. And until next week, take care, everybody.